Hello, this is Simone from Nauma. In this video, we'll talk about tax planning with charitable donations. Most people think about charitable giving as something you do to help others, to support causes you care about, give back to your community, and make a difference in someone's life. That's all true, but it's also a powerful tool in financial planning. When you give strategically, you can reduce your tax bill and maximize the value of every dollar you donate. Let's quickly take a look at this demo profile. It's a couple in their late 30s with 2 kids, and they have some asset, about 2.2 million in different accounts, and a primary home with a mortgage. And then in terms of incomes and expenses, they both work. Their annual income is $350,000 and some spending already logged. Now let's take a look at their financial projection. It's quite simple. They have financial independence that has all the incomes, including the future incomes and expenses. That's this purple bar right here. And then kids' college, they have 2 kids. They assume that they will pay for the college when it comes. And there's long-term care and own home. Own their primary home also involves like paying for the mortgage and some maintenance cost and the property tax. So that's the baseline. On the left side, we can see the cash flow projection, and on the right side, we can see the net worth projection. Now let's make a charitable donation. To make this easy to see the effect, I'm creating a new life event called donation, and I'm going to add an expense. Donation expense, let's say my donation. And start with cash donation, that's simple, and $50,000, let's say we only do it one time, and we do it, say, next year. 2026 sometime. So once we apply, we show that that's inflation adjusted. So let's take a look at today's dollar. This small red bar is a donation, that's $50,000. If I uncheck that, not making the donation, we'll see a very small difference, barely detectable. But if we look at tax, we can see it more clearly. Without that donation on 2026, my total tax is $75,000. And if I do make a donation, my tax gets reduced to $58,000. That's like $17,000 difference. And it seems like that's the only effect it has currently, if I check. But I want to run an analysis. Usually, the charitable donation, the effect of tax deduction, it has higher effect if it's on a year that you make more. So let's do an example here. Assume I'm doing really good for this year, I'm gonna have a bonus early next year, or other case like if you're starting a new job, maybe you have like a sign-on bonus. Let's call it extra income, something happened next year. Let's add my bonus. Let's say be dramatic, $20,000 one-time bonus happening next year. It could also be if you have an investment that's due to redeem, then you may have that extra income. Now, with this extra income, let's uncheck this. This was our baseline. With the extra income for 2026, we are paying more tax, right? And then baseline will be $156,000. And if I make a donation, it gets reduced to $135,000. So now in this case, I'm getting $21,000 tax benefit in comparison with the 17 in our prior case. In other words, it makes more sense to make the charitable donation when you are in the year that you are making more income. That's one example I want to show. Another one would be, right now it doesn't make a big difference. If I change or not, only affected this year, 2026. But as I was experimenting, I noticed one thing. If I reduce the income a little bit, and then it's a very interesting effect. If I change donation, somehow down the road, like 2051, it has like some effect. What happened here? Why, like when I'm making a donation in 2026, it would affect my tax in 2051? And here's the catch, it's interesting. So if we look at our net worth, there are different colors. The light green one is the taxable income, and the dark green one is tax deferred income. This couple retire like around 2044. And after that, they will live on their savings or taxable account to start with. And their taxable account gets slowly reduced on 2051, the taxable account ran out of money. So in order to cover their living expense, they have to withdraw from tax-deferred account. That's paying ordinary income tax rather than capital gain tax. So that's make a difference. If we look at that, without donation, that means the same $50,000, instead of spending it as a donation, I'm saving it in my taxable account. So by 2051, I still have some in my taxable account to be able to withdraw. But if I've donated, then on 2051, I run out of my taxable account. I have to take money from tax deferred account, and that pays more tax. And that's why we see a difference. If I don't donate, I only pay $37,000. But if I do donate, even though I get reduced tax here, I'm paying more on 2051, $53,000. In this scenario, it may not really make sense to make the donation from tax planning perspective. Okay, so far we've been talking about cash donations, and I want to make another comparison between cash donation and asset donation. Let's first change this back a little more so that we don't run into the issue we just talked about. Now, donation with or without donation, it doesn't seem to affect the later years. And back to 2026, we currently, with donation, is $43,000. Without is $58,000. And then for this donation, let's change it to asset donation, see how would that affect. Now it's 42. I think it's slightly different. The reason is for any year that we're withdrawing from the taxable account, there will be a small effect because we're donating the asset and it will affect the whole cost basis of taxable account. Let's find 1 year more straightforward. So on 2039, it seems like we're withdrawing a good amount. And with asset donation, let's see the tax. That's $119,000 with asset donation. And if we change this back to the cash donation for that year, it goes to $120,000. So there's a $1,000 difference when for that year we're withdrawing. In general, whenever we're withdraw from that point forward, since we're donating asset, it adjusts the cost basis. So going forward, whenever we withdraw, the tax would be slightly different, and we would have that effect of saving on the capital gain spread over years we withdraw. And that's the last example I want to show. Now go back to our slides. Here's the summary. We ran 3 examples. First one would be comparing on different income. If it's the base case, we save $17,000 on the cash donation. On the other end, if we're making another $200,000 on that year, like as a high income year, we're saving $21,000 on tax. There's a $4,000 difference. And the second case would be if we are a little lower income, then our taxable account at a certain year run out of money, and that's on 2051. When we make the donation on 2026, we save $9,000. But later in 2051, since we run out of money in taxable account, we're actually paying more tax because we're forced to withdraw from tax deferred account for that year. And maybe it doesn't make sense in this case to make the donation from tax perspective. And then last one is lower income, still a little bit lower income, but comparing cash donation versus asset donation. On that 1 year, 2039, we see a $1,000 tax benefit because we're making asset donation and we have a low cost basis. This actually affects multiple years, and we're only showing this 1 year. All right, that's about the case study. And in the end, I want to talk about when to consider charitable donations. First, it's obvious that for the year we have high income, the charitable donation would actually have a bigger tax benefit. So that's when you want to make charitable donations. The second one would be if for the year you are already making itemized deduction, then all the charitable deduction would go directly on top of the existing itemized deduction. In that case, it's a good time to make charitable donations. The last one is when you have like appreciated asset with low cost basis, but the value has grown a lot. It's a good time to consider charitable donation to directly donate the appreciated asset. All right, so that's everything I want to share about charitable donation for tax planning. Hope you like this video. Thank you.